Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key levels for both the indices. We'll also be discussing on the sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. In trade yesterday, all the three US indices ended on a positive note. The tech-heavy Nasdaq surged by 1.6%. We had the S&P 500 which jumped up by 1.1%, and the Dow ended the day 0.3% higher. For the S&P 500 specifically, going forward, the zone of 5,500, 5,520 would be the crucial support zone, while on the upside 5,600, 5,620 would act as the immediate hurdle. Coming to crude oil, so since the last two trading sessions, Brent oil is in a comfortably trading below its 200-day EMA level. The daily RSI is also quoting below 40. Going ahead, any sustainable move below the levels of 80.80 would lead to further selling pressure towards the mark of 78 in the short term. Coming to the US dollar index, so the dollar index is oscillating near its 200-day EMA level for the last two trading sessions. Any sustainable move above the levels of 104.5 will lead to an extension of the pullback rally up to the levels of 104.90. Now coming to the update regarding our markets. Do note that today we would be having the union budget as well, so that would be the main event in trade today. The union budget announcement is scheduled at 11 a.m. Coming to the technical chart pattern for the markets, on the daily scale, if we see Nifty has formed a high wave like candle, which indicates market participants are waiting for the event outcome to play out. Going ahead, the levels of 24,420 will act as the immediate support for the index. If the index slips below the levels of 24,420, the next support is placed in the zone of 24,310. On the upside, if we see for Nifty, 24,590, 24,610 will act as the immediate hurdle for the index. Any sustainable move above the levels of 24,610 will lead to a sharp upside rally towards 24,730, followed by 24,840 in the short term. Coming to the derivative data front, so if you see the July futures ended on a flat note, and the cumulative open interest of the current, next and far series has dipped by 1.47%. Among the constituents of the Nifty index, 11 stocks have witnessed long build up, 20 stocks have witnessed a short covering rally, while 11 stocks have witnessed short build up and 8 stocks have witnessed long unwinding. Coming to the option chain data, so 24,600 strike has significant call open interest, followed by 24,700 strike, and on the put side 24,500 has significant open interest, followed by 24,400 strike. For the July monthly expiry, we have the OI PCR which is at 0.89 and the max pain is at 24,500 strike. Coming to the update regarding Bank Nifty, so Bank Nifty, since the last 10 trading sessions, the index has been oscillating in the zone of 52,818 on the upside and 51,749 on the downside. Due to the consolidation that the index has witnessed in the past few trading sessions, we witnessed that the Bollinger Band has been seeing a narrow consolidation as well. So if you see on the technical parlance, it is known as a Bollinger Band squeeze. It occurs when the volatility falls to a low level and the band considerably narrows. A volatility contraction or narrowing of the band can foreshadow a significant advance or a decline. Hence, we expect a trending move in the index in the next few trading sessions. Going ahead for Bank Nifty, the zone of 52,750, 52,800 will act as the immediate hurdle. Any sustainable move above the levels of 52,800 would lead to a sharp upside rally in the index towards the mark of 53,100, followed by 53,400. On the downside, if we see the support is seen closer towards 51,700, any sustainable move below the levels of 51,700 would lead to sharp profit booking in the index up to the levels of 51,200, followed by 50,700 in the short term. Coming to the option chain data, so we witnessed that 52,500 strike has significant call open interest followed by the 53,000 strike, and on the put side if you see it is mainly seen in 52,000 followed by 51,500. For the weekly expiry, that is tomorrow, we have the PCR which is at 0.59 and the max pain at 52,300, while for the July monthly series we have the PCR which is at 1.03. Now coming to the key market indicators, so the volatility index India VIX has surged by over 2% in trade yesterday. Going ahead, any sustainable move above the levels of 15 will lead to a sharp upside rally towards the levels of 16.2 in the short term. Despite the sharp upside rally in frontline indices, the advanced decline ratio tilted in favor of the declining counters yesterday. This indicates selective large caps which are participating in the rally. Coming to the key sectors in focus, so we have Nifty Pharma and Nifty Healthcare which has taken support near the 20 EMA level in yesterday's trading session and witnessed a smart rebound. We believe they are likely to outperform in the short term. In trade yesterday, the stocks from fertilizer, hotels and selective cement space witnessed bullish momentum along with robust volume. We believe they are likely to continue their upward journey in the next couple of trading sessions. Coming to the FII-DI data, so FII has bought to the tune of 3,444 crores in the cash market, while DI has sold to the tune of 1,652 crores. If you look at the long short ratio for index futures, it is at 77.4 on a net basis. This as they sold about 20,096 index futures in trade yesterday. On the stock futures front, FIs have bought to the tune of 88,447 contracts, while on the options front, FIs purchased 98,338 call contracts and 47,626 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast. Wishing you all a happy trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.